Adrian, how do I manage risk in trading?
Gosh, there's probably three main things you can do, I would say, off the top of my head. One, diversification. So, for example, if you're trading stocks, you don't want to just load it up all into one stock. You want to sort of spread it across maybe stocks from different sectors or maybe from different countries, something like that. So, that's one. Number two, trade sizing. So, one of the things a lot of traders will recommend is making sure that you don't risk more than a certain percentage of your account in any one trade. That could be risking 1%. So for example, let's say you've got £1,000 in your account. 1% of that will be £10. So you don't want to risk more than £10 of your account in that one trade. So if it was a loss, you'd only drop to 990. The reason that's important is because if you had a few losses in a row, it's not going to have a big problem on your account. What you don't want to do is suddenly go from £1,000 account to £500 in a day, thinking, "Oh my God, what's going on there?" Because it can really affect the psychology of trading. So managing risk like that is really important. And then on a trade by trade perspective, it's using something called a stop loss. So let's say you enter a trade at, I don't know, 100. You should have an idea of when you want to cut out of that trade. So that might be at, say, 95 or something. So the price gets down to that level, you can set an order with your broker platform to cut you out. Because again, you don't want to wake up the next day and see the price down at 75 thinking, "Oh my God, look how much money I've lost." You don't have to worry about that. Put a stop loss in, and the broker will automatically close you out of the trade.